Well, good morning or good afternoon, everyone. We are here. I will give everybody a minute to come online for the webinar this afternoon. Stacy, looks like we've got 30 or so there. So I think we'll go ahead and get started with the session today. So welcome everyone to the next edition of the Critical Canadian Building Science webinar series. Today, with the help of Enbridge, who sponsors these sessions, we're going to take a little bit of a diversion and actually look at the financial side, the affordability side of building high performance, better built homes and buildings, right? We talk a lot about new technologies, heat pumps. We talk about better insulated walls, air tightness, all those things, but it's nice to actually move over and go, is there a lane for these high performance projects to actually get some extra credit? And can these buildings and projects be more affordable? So we've got some guests with us today. So this is the session on the Canadian Mortgage and Housing Corporation mortgage loan insurance, better financing for better performing multifamily projects. And we're going to provide a little bit of a case study too. As we get going here, I'd like to invite Susan Cudahy from Enbridge.
Thanks, Andy. And welcome everyone on behalf of Enbridge to today's webinar. And maybe we can go to the next slide. So as always, we'd like to start today's session by acknowledging that the land on which we gather is the traditional and historical lands of the original people of Turtle Island, who have been the caretakers of these lands since time immemorial. And today, this gathering place is home to many First Nation, Métis and Inuit peoples, and our acknowledgement of this reminds us that our great standard of living is directly related to the resources of and relationship to Indigenous people. And we have a responsibility to honor that. So we can go to the next slide. So just a very quick safety moment. Most people know this, but what do you do if you damage a natural gas line, which can happen? Whether you're doing landscaping, putting in a deck, that sort of thing, stop your work immediately, get everyone out of the area, call 911 if you smell or hear gas escaping, and most importantly, call the Enbridge Gas Emergency Line, 1-866-763-5427. So a little bit of a message, especially as spring comes and people are starting to do work around their homes. So be careful, always call before you dig. And we'll go to the next slide. Okay. So what I want to do is just take a moment on behalf of Enbridge Gas, really just to thank everyone for all of your support with Bill 165, the Keeping Energy Costs Down Act that we are currently going through and working with. This legislation really reinforces the critical role of natural gas in keeping energy costs down and the importance of natural gas in Ontario's measured energy transition. All of you and your ongoing partnership with us has been and will always continue to be essential to ensure that new homes have access to reliable, affordable, resilient natural gas. And this is energy that is not only available now, but is in such supply that it'll be available for years to come. So as Ontario continues to grow, the government's efforts to build more homes faster will make home ownership more accessible and affordable. And so those of you on this call will be the ones that will make that happen. And Enbridge Gas is proud to be able to support and partner with you throughout this effort. So with that, I'm going to turn it back over for today's excellent webinar topic.
Thanks, Susan. Thank you very much. Okay, let's, the agenda today is going to be pretty straightforward. We're going to do some introductions, then we'll get into Jeremy Tessier is going to walk us through the CMHC MLI program. Scott Schrier is going to give us a little bit of builder's insight, designer's insight as to what are some of the specifications that would help a building or a project achieve this. And then we're going to have some time for Q&A. And then as usual, sort of wrap up. So housekeeping rules, a couple things, folks, you all know the drill. So if you have questions, please put your questions related to the topic into the Q&A. Do not put them into the chat. So again, questions related to the topics today, put them into the Q&A, and that allows us to thoroughly address the questions and to also save for transcripts later on the questions that were asked. The other thing too that we would please ask is, remember, you are Canadians, and in the chat, be thoughtful, be respectful, be considerate. Again, we're glad to have you here, but let's keep that sort of at the top of things, is the professionalism. Our admin team, we have Stacy Cooper in the background. Stacy is on our admin team. You'll see Stacy over in the chat. If you have technical issues, if you have questions about the presentation and where it goes next or all that kind of a thing, you can ask her and she can address that there. The webinar is going to be recorded today. So the recording, you will be sent a copy of the recording as well as the presentations. You can listen to it with your team. You can access the recording on our website along with about 30 other building science webinars like this. The links, the presentation materials, everything will be sent out. We do ask, please take a few minutes and just do the Survey Monkey. It's not very long. You'll get it afterwards. Just do the Survey Monkey, throw in some of your comments. It's very helpful. For those of you that do require closed captioning, it can be enabled also in a live transcript. So just note that at the bottom. Those buttons for closed captioning is in between the record and the reactions at the bottom of your screen. So let's, first of all, we always like to find out where you're from. So get out your Zoom poll devices. Give us a real sense. So we'll have Stacy run a poll for us. Where are you sort of calling in from today? Give you a few seconds there. While you're all doing your polls, just a note, my camera is giving me a little bit of a hiccup today. So I'm just going to claim that actually Scott is me. He's much better looking. I'm just the voice. So there you go. Excellent. So we've got some Ontario, some Quebec, Saskatchewan, Alberta, and British Columbia. That's excellent. Oh, and some Atlantic provinces in Quebec. Wonderful. If you don't fit into any of those categories, please feel to put it over into the chat and let us know where you're calling in from. All right, Stacy, thanks for that. Let's go on to the next poll. And just let us know what you do day to day. What keeps you busy? It's always nice to know who's calling in and is interested in these things. I would imagine we would have some renovators and developers and builders on here. That's those are sort of the key folks that Jeremy and CMHC are looking for. So good. So we've got some high percentage of builders, renovators, or developers from across Canada, engineers, architects, construction managers, energy advisors, building officials, number of building officials. That's excellent. Mechanical designers, contractors, and others. If you're another, put it in the chat. All right. Thank you, folks. Thanks, Stacy, very much for that. There's your sort of the results you can see there. And again, we'll send some of those results out afterwards as well. So real quick, Jeremy, it's nice to have you with us. Says here that you're focused sort of on the housing sector. You've been with CMHC for some time. Do you want to just say a few words?
Yeah, sure. So my role, I'm based in Toronto, out of the Toronto office of the CMHC, and I'm what they call a knowledge transfer specialist. So I work on the outreach team to deliver the most up-to-date information on our programs and products to the general public and to our partners across all sectors. So that's what I'm focused on. Thank you very much for the opportunity to be here to share the latest from the CMHC, and just know that it's always, our programs are always evolving and changing. So I'm really happy that we could have such a great audience to share and hopefully get some feedback from you as well about your impressions on the program.
Yeah, thanks, Jeremy, very much. And no, I like that. We often try to, in these webinars, is for our experts like yourselves and our guests, is to provide you some feedback too, because the industry is constantly evolving as well and changing. So we're gonna bring you on in just a minute. In the meantime, Mr. Scott.
Hi, everybody. I'm Scott Schrier, as Andy has introduced me. I've been working with Building Knowledge Canada for 6 years now. I'm a registered energy evaluator with Natural Resources Canada, and I work on lots of performance programs, such as, but not limited to, the CMHC MLI Select program. And later on in today's presentation, I'm going to be going through a short case study to give everybody a clear picture on what exactly needs to go into a building envelope and a mechanical system, most likely for one of these projects. Happy to be here today.
Good. Thanks, Scott, very much. You have myself, of course, and just acting as your host and then helping with some of the QA. So, Jeremy, I'm going to close up my screen, and why don't you take it away?
Thanks, Andy. Will do. Just need one moment to do that. Okay. So can you can
There.
see that?
Yep, there it is.
Great. Okay.
That looks good.
So kind of already did a bit of my introduction, but so I'm here to talk to you about CMHC Housing Solutions with a focus on mortgage loan insurance and specifically mortgage MLI Select, which is a very popular program. CMHC's role has evolved over the years. I think, probably thinking back to the 40s and 50s, CMHC was doing a very different role than it is today. But one thing that is kind of a constant is our supporting of the housing sector through mortgage loan insurance, right? So maybe some of you have used mortgage loan insurance for your family home, be able to purchase something with 5% down instead of 20% down, for example. So what I'm going to talk to you about today is our commercial versions of those products. So MLI Select for multi-units. And I also want to differentiate this because if you go to our website, you'll see a lot of information. And CMHC since 2018 has been tasked with delivering on the national housing strategy. So we also have direct lending products. Things like maybe you've heard in the news about the Rapid Housing Initiative, the Apartment Construction Loan Program, or the Housing Accelerator Fund. These are all programs that are designed through the National Housing Strategy and that are meant to achieve more supply, but also helping those in need of housing now, right? So we have a supply issue. We also have an issue where there are some folks that are not going to be accessing market units that need to be housed. So not to over confuse you, but we're not going to be looking at those programs today. We're going to be looking specifically at mortgage loan insurance, which is our commercial programs. And specifically, we'll look at our standard mortgage loan insurance for rental properties, and then we'll contrast that with the MLI Select program, which I think is probably of most interest to the folks on the call. So looking at standard mortgage loan insurance, CMHC is the only provider of mortgage loan insurance for multi-unit residential properties. And it's a commercial product that does provide access to preferred interest rates and lower borrowing costs for the construction, purchase, refinance of residential properties, and it also facilitates renewals. And so qualification for these programs are available for borrowers for properties of 5 more units, and that would be submitted through an approved lender. So we have a list of lenders that we work with, and those that are approved to provide this service would be able to assist you. So this is not a direct program where you're talking to the CMHC directly. You'd be working with your lender to ensure that all the criteria are met to be eligible for the program. So what can you do with mortgage loan insurance for multi-unit properties? Well, you can use it for construction of residential housing. You can use it to carry out improvements on existing residential housing. You can use it to purchase existing or new residential. You can use it to refinance. Also eligible are purchase and conversions, right? So from a non-residential use to a residential use, that's considered new construction. And you're also able to use it for equity removal. This gives you a kind of a glance at the maximum loan to value ratios that are eligible through the standard multi-unit mortgage loan insurance. So you'll see here for construction financing, you can get up to 85% of lending value as determined by the CMHC, or 100% of cost, whichever amount is less. For purchase refinance and purchase refinance with improvements, it's all at a maximum of 85%, meaning that 15% would have to be accounted for elsewhere in your kind of capital stack, right? Looking for equity. This allows you to get more debt from the lender and less equity from your partners. Eligible projects. So obviously standard rental housing is an eligible use of these funds, but also things like student housing or single room occupancy units are eligible, as well as retirement housing and supportive housing. This next slide illustrates the debt coverage ratio requirements for those different types of housing. So you'll see the lowest debt coverage ratio requirement is for standard rental housing of 5 or 6 units. For a purchase, it's as low as 1.1. For refinance, it's a 1.2. Then if you get into larger projects, 7+ units, the purchase becomes 1.3, and if it's for less than 10 years, over 10 years, it's 1.2. You'll see they're a bit higher for retirement housing, student housing, supportive housing, and non-residential spaces. And this is all based on the risk factor, right? So obviously student housing is riskier, retirement housing as well. The markets are not as normalized as they are for standard rental housing. So that's reflected in these DCR requirements. So the reason I'm showing you this, you're very welcome to use it, and we do encourage people to use standard mortgage loan insurance. I just wanted to contrast that with what we have available through the MLI Select program. So this is a program that was launched in the spring of 2022. It's undergone some change, but it remains a very popular program. It's essentially an innovative way of providing financing, providing securitization, while also securing what we call social outcomes, right? So a big part of the National Housing Strategy and CMHC's mandate is to provide better social outcomes to Canadian communities. So this product focuses on affordability, focuses on accessibility, and climate compatibility. So how does this work? So this is a product that offers greater levels of flexibility, and it also offers incentives based on the level of commitment made towards achieving those social outcomes. So MLI Select uses a point-based system to offer insurance incentives based on the level of commitment to either affordability, energy efficiency, or accessibility. And they have the borrowers have the opportunity to commit to a blend of outcomes, which lets you tailor the outcomes to fit the project. So in our other programs that are direct lending programs, we offer discounted loans, but we also require that all these social outcomes be met. This is kind of a more a la carte program where you can choose your own adventure and see what works best for the site, for the project that you have in mind. Ultimately, though, the bigger the commitment to social and environmental outcomes, the better the incentives. So you can choose to focus on a single area like affordability, or you could also combine those commitments for climate or accessibility. You could also just focus on climate compatibility. But the point is you can blend these together, as we'll see when we get into looking at the point system and how you're allocated points. So the incentives that are provided include higher loan to value ratios. They include longer amortization periods, lower debt coverage ratios, and recourse and replacement reserve flexibilities, as well as reduced mortgage insurance premiums, which are not so much based on risk, but they're based on social outcomes. So that's another point that differentiates it from our standard MLI program. So this is a program that was designed in consultation with the sector, with industry. And we found that borrowers, project developers were interested in providing social outcomes, whether that's affordability or energy efficiency, climate compatibility, as we call it for this program. They were interested in providing that, right? But they also need to meet their bottom lines and make sure that their business goals are still achievable. So this is an offering that hopefully can do that, right? So any costs incurred upfront, like for higher energy efficiency or foregone revenue from providing affordability in those units, there's project parameters that can be offset by the flexibilities provided in these programs. So they're designed to increase project cash flow and partially offset those costs incurred to provide those social outcomes.
Hey, Jeremy, it's Andy. I find this really interesting, and I know we'll have some folks on the line that will remember, but I find this fascinating, this intersection between CMHC and the federal entities that are responsible for building and home types for Canadians. They want something that's going to last, and they also want something that's going to be durable, right? So there's that nice intersection between well-built homes and buildings that actually last. I want to just make a note for those that are on today. This is not something that's new in any way. I mean, the history, Jeremy, of CMHC, all the programs CMHC did, they were the ones that identified, water management requirements years ago to make buildings better. They identified indoor air quality, the old Clear the Air program that indoor air quality had. Our own Gord Cook actually helped author that. And the whole idea was, if you're going to support the construction of homes and buildings and developments for Canadians, you darn well better make sure they last. And I think it's interesting to note that the Canadian building codes and the United States building codes, by definition, are codes that specify tenable use of housing to only 50 years. Whereas most other nations are far in advance of that, 75 to 100 years. So I like this, right? You have your needs, and now it encourages others to build a little better. But it does come down to just building buildings that actually are going to last longer and be better for Canadians. So sorry, I had to just say that. It's sort of cool when building science actually is real. So
yeah, I appreciate that, Andy. And you're right. We have archives of all the interesting research and innovations that have come out of the work of the CMHC, and a lot of it goes unnoticed and just kind of becomes an industry standard. And so yeah, this is just a continuation of that. So thanks for pointing that out.
good.
So just getting back to the MLI Select parameters. So like our other programs, it's a minimum of 5 units that you have to be applying for here. Except if we're talking about retirement homes where that minimum becomes a 50 unit or 50 bed requirement. So the applicable projects, again, standard rentals are eligible. Retirement homes, single room occupancy, supportive housing, and student housing is also eligible. However, for student housing, they're excluded from that affordability criteria. So student housing projects can't get points through the affordability stream. And that has to do with the kind of unusual tendency of student housing. So eligible loan purposes, it's pretty much all the same as before, except for that equity removal piece. Construction improvements, purchase and refi, and then purchase and conversions of non-residentials are all eligible for the MLI Select program. So affordability criteria, right? So people have different definitions of affordability, and we have people coming in from all across the country. They probably all have, maybe there's one in your city or in your region, maybe there's a definition provincially. Through the National Housing Strategy at the CMHC, our overall definition of affordability is thinking about having rent be at 30% of that household's median income, right? But of course, that's kind of hard to action when in program design. So what this program does is it looks at median renter income sampled in different subject markets, and then uses that as a benchmark to determine what affordability would be. So it's not based on an individual tenant's ability to pay. It's really based on what is the median renter income in that subject market. And then that becomes the benchmark for saying what that affordability level must be. If you do commit to affordability, it's a 10-year affordability commitment. And if that affordability commitment is extended beyond 10 years to 20 years, additional points can be allocated. So here's kind of a table. We're starting to get into looking at the points that are available. So for this program, the minimum amount of points needed to enter the program is 50 points. Once you achieve 50 points, you're able to use MLI Select. The maximum you can achieve is 100 points. So there's no incentive to go beyond that. Obviously, if you'd like to, there's other reasons why you might want to, social good, specific clientele, really just building to a really high standard of energy efficiency. But the points do top up at 100%. So what that looks like for a new construction in terms of affordability is we ask that 10% of the units be made affordable, and that will get you into the program at 50 points. If you look down to the second table for existing properties, that becomes a lot higher for existing properties. And it's because we understand that there's probably some level of affordability already built into these existing properties. And so we ask that 40% of the units be provided at that affordability range to enter into this program to get those 50 points. If you look at level 2, for new construction, it goes from 10 to 15% of units have to be affordable, and that'll get you 70 points, right? So you can do 70 points, you're into the program, you're kind of into level 2 of the program. And if you were to say you're going to provide that affordability over 20 years, you get an additional 30 points. So level 2 level of affordability, 15% of units, but affordable over 20 years, that gets you 100 points. Or you can do, to get that 100 points, you can do 25% of units affordable for 10 years and have that get you those 100 points. And as you can see for existing properties, it's a lot higher. So we're talking 60 and 80% of units respectively to get those 70 and 100 points. Now, this is probably the one that you're most interested here, is looking at the climate criteria. So when we're thinking about climate criteria, I kind of use the term energy efficiency interchangeably, but it's really not energy efficiency. That we call it climate criteria because we're talking about a reduction of energy consumption. We're also talking about a reduction in greenhouse gas emissions in the project. So you'll see here, level 1, 20% above code does not get you into the program, right? You would have, if you want to do level 1, you have to pair that with affordability, or as we're going to see, some accessibility. And if you look at the existing properties, level 1 is only 15% decrease in energy consumption and greenhouse gas emissions to get that 30 points. And the difference there is, 1, you're building better than the code, and 1, you're doing a baseline assessment of what the energy consumption and greenhouse gas emissions are, and then you're reducing that. So there's a bit more forgiveness in that first point about trying to achieve those a decrease of baseline emissions for level 1. If you look at level 2 and 3, though, they do both go into 25% better than code or baseline and 40% above code or baseline to get those 100 points. So you can use this program to its maximal to get the best outcomes, the best flexibilities and incentives solely through climate criteria, but you can't enter the program solely through these climate criteria.
So Jeremy, just to clarify real quick, for new construction, the baseline is the national building codes. For existing properties, the baseline is the current performance of the building without the upgrades.
That's correct. So we do a baseline assessment, and then they're measured above that.
Nice. Okay, thanks.
Yeah, thanks for that question. The last one, I won't spend too much time on this, but you'll see this is about accessibility. So there's different ways of achieving the accessibility piece here. You can do it through providing some units fully accessible. Some units can be of a universal design, and CMHC put out a universal design catalog last year, which is very interesting if that's of interest to you. Just trying to build, not necessarily accessible, but build in a way that is kind of future proofing, right? So maybe when you're building, you'll put in some extra sockets or some forethought into who a future tenant might be and what their needs might be, right? So thinking about that and in the universal design concept, that can get you some points. So you can get 20 points level 1. So you could do a bit of accessibility and a bit of energy efficiency, and that'll get you 30 plus 20 points, 50 points, you're in the program. You can also go a bit higher, if you want to provide deeper levels of accessibility because the clientele is going to age in place. If you're building for seniors, there would be an incentive to do that and to make this more welcoming and future-proof for their needs. And we will incentivize that behavior through these points. So this is kind of where it all comes together, looking at the top row here, this top table, this is what we've looked at already. So for a new construction, those points you can get for affordability, for energy efficiency and greenhouse gas emission reductions, and for accessibility. If you look at the bottom table, direct your eyes to this bottom table, and you see that minimum 50 points, right? So this is what I mean when I say you have to have 50 points to get into the program. And once you have those 50 points, you benefit from a loan to cost of up to 95%. So for our standard MLI product, it's 85%. So right away, there's a step up there in the loan to cost that can be provided using the minimum threshold to get into this program. And that's the same across all these points, right? So you can get 100 points, you're still up to 95% loan to cost. The DCR doesn't change. However, the amortization periods do change. So they go from 40 to 45 to 50 years based on those points. And if you can achieve 100 points, then that loan becomes limited recourse and the replacement reserve is discretionary. And then looking at what that looks like for existing properties. So again, that top table, we've kind of already covered that. If you direct your eyes to the second table, look at that minimum 50 points. The loan to value is lower for the 50 points. It's 85. So it's similar to the loan to value from our standard MLI product. But if you get to 70 points or 100 points, it then climbs up to 95%. And again, the amortization periods scale up, and at 100 points, the loan does become limited recourse. So that's the program in a nutshell. I just want to finish with a couple of notes about some changes. So we just had a federal budget announcement. We don't have the details, unfortunately, of all the changes happening in the federal budget. We anticipate a lot of new programs being rolled out at the CMHC. But these are some notes from the fall economic statement that refer to the work being done in the mortgage loan insurance space. So CMHC provides mortgage loan insurance for builders to build that new supply that we very much need, right? By providing mortgage loan insurance and securitization. And so what the government has done is they've increased CMHC's annual limit of support for low cost financing by 20 billion per year. So it's up now to 60 billion, where it was 40 before. And that 20 billion has been designated to fund multi-unit residential projects insured by the CMHC. So we're anticipating that that will lead to up to 30,000 units, rental units per year additionally in the market. And we've kind of already touched on these eligibility requirements. And the last thing I want to mention, some of you may have used MLI products in the past, or MLI Select products in the past, and CMHC requires time to ensure that these investments meet the right policy criteria and the right risk level. And so in 2023, in the spring of 2023, this was a very, very popular program, and we received an unprecedented volume of applications for multi-unit mortgage loan insurance. The premiums also went up around that time, so a lot of people tried to get in right before the premiums went up. And so there was a backlog, and we were not necessarily able to meet our service standards in terms of getting those sorted. However, CMHC has made significant progress to accelerate approvals. We've staffed up, and we're looking at doubling our processing rate. So by speeding up the processing, CMHC will continue to play a key role in supporting the availability and diversity of financing options available for rental housing. So that's kind of what I want to run by you. I also always like to throw this slide up here. If you want to, I think Stacy's going to pop it in the chat, the link as well. But if you want to get your phones out, if you're not using your phones to watch this, and you can sign up for our newsletter, you'll get news blasts based on all the changes happening to our programs. And our programs evolve. We adapt the programs to the changing times. And so it's always good to be aware of things happening at the CMHC. So I'll leave it at that. And thank you very much for your time. And we'll pass it over to Andy or Scott, I guess.
Yeah, thank you. Thank you very much, Jeremy, for that. We've got some questions in the Q&A. We'll get to those after Scott's done, but go ahead, Jeremy, and take a look at the Q&A, and you can sort of prepare yourself for some of those. We've got some really good questions coming in there. So let me share my screen, and Mr. Scott Schrier, you can take it away there for us.
Yeah, thank you, Andy. We're actually, oh, there we go. So Yeah, thank you very much, Jeremy, for the rundown of the CMHC MLI Select program. I would just like to say that I feel that for almost all builders out there, this would be a very advantageous program to partake in, especially because lots of municipalities these days are, from my perspective, especially, they're really interested in things in dense housing development plans. So we're seeing lots of these multi-unit residential buildings. We're seeing lots of push for better social good in terms of the implementation on these projects that we'd like to see, as Jeremy was talking about. So there may be a chance that depending on where you're building and who your clients are for, these are things that they're interested in anyway. So CMHC's MLI Select program is a really good opportunity for you to take full advantage of these things. So what do some successful projects look like for the CMHC MLI Select program? I think that you'll be able to infer from looking at these images that it looks like product types that we're already used to seeing. Even though energy efficiency is a target here, you can see that these are very typical product types. In the top left corner there, we have something that's very typical back-to-back, perhaps, or a stacked style townhome. We're seeing a lot of those recently. In the top right corner, we have something that looks like a historical schoolhouse in contrast to the first image that we just talked about. This one has one point of entry, and then it would split out interior units after going through the primary entryway. And then on the middle bottom image there, it's something more like an apartment block. So you can see there's lots of flexibility here in the types of projects that you implement. And there's a high likelihood that projects that are definitely early in the design phases too are still something that would be able to take advantage of the program. So now we can go to the next slide and we can talk a little bit about what do these packages look like. So as Jeremy mentioned, just to recap, you can earn points towards this program via energy efficiency and greenhouse gas emission reductions. This is operational carbon for those of you who know a little bit of the lingo. And you can also have a certain percentage of your units be accessible and or affordable, as Jeremy was talking about. Most of the projects that I've dealt with at Building Knowledge Canada here have focused primarily on energy efficiency criteria. No surprise there, we are an energy efficiency company. And the good news about doing energy efficiency and greenhouse gas emission reductions is that those can be achieved through a combination of energy efficiency upgrades, and you can get really good operational carbon reductions by using stuff like things such as heat pump technology, electrifying these homes, centralized systems, and or deeper energy conservation measures, going through things using such as air tightness, increasing your insulation, improving the glazing area on the home. And the targets for these are maybe a little bit different for those of us in Ontario who are used to looking at energy efficiency programs, where the CMHC MLI Select program is using a reduction from the 2015 National Building Code, or the NBC 2015-936 code. And the Ontario Building Code SB 12 that a lot of us are used to using here in Ontario, we're about 8 to 10% above that as a baseline already. So we already have a little bit of a jumping off point there.
And a couple things, Scott, I'll just hop in here. I think that's a really important note for those of you in Ontario, is building to the current SB 12 2017, and then also building to the SB 12 2025, which we were just notified by the ministry in the last week that that'll continue on for the next 5 years. You are already, by virtue of building the code, 8 to 10% above. So your delta to overcome to reach some of these efficiency and greenhouse gas emission levels is reduced. So it depends on where you are in the country. I will say too, when we talk about reduction of greenhouse gas emissions, we do have to recognize that the electrical grid in each of the provinces and territories is substantially different. So we do have to use the grid emissions that are appropriate to each of those individual provinces. So there's going to be some measures that are going to do well in Alberta that maybe in Ontario are a little different, maybe some in BC that are a little different than Manitoba. But all in all, to Scott's point, the biggest bang for your buck starts out with a better envelope. In all cases, can reduce those emissions and likewise energy efficiency. Thanks, Scott. Thanks for letting me hop in there. I'll jump to your
Yeah,
next.
yeah, no problem. That was a great point, Andy. I thank you very much for bringing that one up. So diving a little more into what these packages look like, due to the nature of the program, so while you are earning points through tables with the CMHC MLI Select program, the energy efficiency portion of it specifically is performance-based. It's not what we would call prescriptive-based. So you're going to have to get an energy advisor working with you, somebody who's registered to build energy models, and you're going to have to dive into the weeds a little bit, if you'd like to call it that. There's not a particular table. Those of you who are used to the Natural Resources Canada Energy Star for New Homes program, lots of you are used to using Energy Star Prescriptive, where you're picking your packages from points. However, again, in this one, it's performance-based, so we're going to be creating energy models and comparing the energy usage of those to those baselines that we had in the previous slide. Because it is a performance program, the energy efficiency package that you end up with, there is a chance that it can vary between the products you're building, in between building styles, and between lot facing directions. And this is why an energy advisor would be really helpful for helping you optimize all of your specifications to help ensure the cost reductions, as well as balancing the ease of designing and building and the optimal return on investment. Many of these product types may require continuous exterior insulation on the wall, and the 40% energy efficiency and greenhouse gas reduction improvement may require the above, as well as additional systems, such as but not limited to a high efficiency heat pump system for space heating and cooling. This can be dual fuel or an all electric case. High efficiency water heating units with little to no standby losses. So what we're talking about there is an instantaneous natural gas on demand tank, for example. If you were including appliances with the homes, Energy Star appliances would be included as a standard. Your window performance would be improved, looking somewhere towards a 1.2 U value. What does this look like? Perhaps it's a triple pane. You may be looking at a really good double pane as well. There's lots of options out there. We would definitely recommend that you get involved with a window manufacturer and speak to them about your options for meeting performance levels such as that. And universally increased insulation levels and reduced thermal bridging through methods such as exterior continuous insulation are also very common for especially those higher targets.
So again, I just like that point you made, Scott, that the 40% is the highest of the levels, right? So there's a 20 or 25%, but we've had a number of projects that have been able to meet that 40%. And I love the fact that you've laid out, some of the things that are probably going to be characteristic of those buildings. So
yeah, and again, it will vary a little bit based on all sorts of energy modeling factors, but yeah, that is sort of what we're looking at here. So again, so this is the same table that Jeremy showed us. I'm just bringing it back up here one more time so we can just clarify the points a little bit. So as Jeremy mentioned, for energy efficiency on new construction specifically is what this chart is showing here. There's a 20% above code, 25 and 40% above code. Although if you were not implementing any of the affordability or accessibility features to take advantage of the MLI Select benefits, we would be looking at a minimum of 25% above building code. And just a reminder from a couple slides ago as well, we did mention that if you're building in Ontario, the current energy code that we have here is about 10% above that before we even are looking at any alternative solutions. So pretty advantageous there, I would say. This is a short case study that we prepared where each one of these columns is showing a different particular project. Those of you who have worked with Building Knowledge Canada in the past this format may look familiar to you. This is what we call an optimization. This is a service that we bring many of our builders through, and we'd be happy to take your teams through as well, where we take an energy model of your home and we run it through various modeling instances to show different levels of compliance, not only for the CMHC MLI Select program, but also for various other performance programs, such as, for example, Canadian Home Builders Association's Net Zero Ready or full Net Zero programs. So looking at this project here, we have on the very left side column, we have project number 1, which met a 25% performance improvement target. Some higher levels of building envelope improvements that were made were exterior insulation on the outside of the building envelope. So we can see they were using a 2x6 stud at 24 inches on center, and they were using R22 bats with R5. 24 inches on center is not necessarily a requirement for the program. That's just something that these projects were implementing. Under the basement slab, or I believe actually in this case it was a slab on grade, they were putting rigid insulation underneath the slab. Windows were improved. They were more in the Energy Star range, U1.4, ER29. National Building Code has an assumed air tightness value of 2.5 air changes per hour, so that's what we were taking into account there. Nothing significantly different on any of the principal ventilation, and what we mean by this particular line item is an HRV or an ERV. Space heating, though, was using a full electric system in this case, so we were using an air source heat pump with an electric furnace backup. That was doing both space heating and space cooling. And the domestic hot water in this scenario was, as I mentioned before, 95% instantaneous tank, and there was a drain water attached to the units that had them. We can also see that the appliances that were included with these projects pretty much universally were all Energy Star efficient appliances, and all the lighting in the home was 100% LED or CFL lighting, which is the most efficient. So with all these measures added together, this project was able to achieve 27% on the greenhouse gas reduction percentage and 26% on the NBC 2015 total annual energy reduction criteria, which allowed it to get 50 points and take advantage of the MOI Select program. When we move to the next column here, we can see a lot of sort of what we just saw, but taken a little bit higher on this project number 2 column. So this one was aiming for a 40% reduction, and we can see here that starting on the exterior walls, they do have quite a bit more exterior insulation. We went from R5, which is about 1 inch, and this particular one was using a product that was only 2 inches, but was able to give them a 13.1 R value on the outside of their home. This particular project was also slab on grade. However, they chose to also increase the insulation that was going underneath the slab on grade slab as well. And these windows are a little better than the previous one. The previous one was 1.4, which is what we would see very commonly in Energy Star. And this one was 1.2, as I mentioned. So this project actually did implement triple pane windows and able to get to that criteria. Air tightness, again, we are keeping the same assumed value here, and we're not making any big changes for principal ventilation, HRVs or ERVs either. However, while this project did still implement a heat pump for its heating and cooling primarily, it was also using a combo system, so a boiler was implemented as well on this particular one, which would have been a natural gas unit. So while heat pumps are still being used here, now this particular project, instead of being full electric such as the previous one was, it is now a dual fuel system. So lots of flexibility there for you. And we can see here under domestic hot water, that boiler system is also handling the hot water system.
Scott, I'll just make a note, this boiler, so we have a fossil fuel backup, likely natural gas to the heat pump. One thing that this does on a large multifamily unit is actually helps reduce the specified electrical circuitry panel size, because the backup is in fact natural gas, as opposed to if it had been all electric, there would have been a substantial upgrade in this case of both the panel size and the transformer size at the project. So that's why there's a wide variety of either all electric or dual fuel type systems with these buildings.
Mm-hmm. Thank you for that, Andy. This one did not choose to use drain water heat recovery, and the rest of the systems implemented here were similar to the previous one. So all of the appliances that were included were Energy Star model types, and all the lighting was 100% LED or CFL. We can see here at the bottom that this one achieved a 55% greenhouse gas reduction over the baseline, and it got a 42% annual energy reduction from the NBC 2015. So this project was able to take full advantage of the points that are available from the energy criteria in the program. Something that I will note here while we're looking at the 55% and 42% in this project number 2 is you may notice that heat pumps are being shown in all of these examples And I would say that heat pumps tend to be very popular in these units, especially in this product type. They are advantageous because they are very energy efficient, and they also have very low greenhouse gas emissions. So for this particular style of performance program, they're very popular and get chosen a lot.
I think there's a little bit of a building science background to that though too, Scott, that when you get into multifamily units that are built with such good enclosures, envelopes, and windows, the heat loss load and the heat gain load tend to be so small that traditional builder type furnaces are too large. And so you have to get into either small water-based systems like combos simply to meet the small loads, or you run the risk of equipment failure and short cycling. So that's why we're seeing a lot of that, to your point, a lot of nice combination of heat pumps with some natural gas backup on the resiliency side to shave some peaks.
Yeah, absolutely. That's very well said, Andy. And looking at the final project here, we can see that this is very similar to the previous column that we just looked at. Again, R22 bats on the outside, and we're still implementing exterior rigid foam. This one, the R value is a little lower than the previous one, but we're still using R10, which is still in the 2 inches range on the outside there. This particular project also had a basement, so we can see here that in the basement, they wanted to finish the basements because they were having units that were going down into those spaces. So how they finished the basement was they had the 2 inches of rigid exterior insulation that they were using above grade. They were now using on the interior face of the concrete wall in the basement. And they were framing out from that, presumably using 2x4 studs and filling that with R14 bat. And that was how they were finishing the basements. The underslab as well, that R10 insulation would have been going under the slab. And earlier we were mentioning thermal breaks, and this is a great opportunity to save on a thermal break because you can connect those 2 pieces of rigid insulation and have the slab sort of isolated from the wall, so there's no conductive heat loss through those 2 assemblies. This helps keep your basement slab nice and comfortable. It also helps keep those basement units nice and comfortable as well. And this is something that, building on Andy's previous point about mechanical systems and building science history, building high efficiency envelopes like this also helps keep the spaces comfortable. And so that's another nice added benefit of constructing to a standard such as this. This project as well was also utilizing triple pane windows. We can see that they were going for the same spec range as the previous project was. Although they were also, however, this project did also want to take some air tightness testing into account. So they were aiming for a target of 2.0 of for testing these particular units. Still a 75% HRV or ERV, and this one is implementing a similar style of mechanical system where they have a combination system that is dual fuel, very similar to the previous one. So this would be a heat pump with a boiler unit on the inside that would be handling both space heating and domestic hot water heating as well. And we can see in the bottom portion of the column here, again, all the appliances that were included were Energy Star most efficient. All the lighting was 100% LED or CFL, and the greenhouse gas emission reduction was in the 60% range, and the total annual energy reduction was in the 42% range. So very similar to that previous project here.
I want to bring one more thing to everyone's attention, and Scott mentioned this. These projects in particular did choose 24-inch on center. However, because of the amount of exterior insulation, this same project could have done 2x6 12-inch on center. It could have been 16, and it wouldn't have made any difference. And the reason that's important is when you, as many of you would know, as you get into 2-story or 3-story multifamily, the first story on a 3-story unit is typically going to have to be 2x6 at 12 or 16-inch on center. So don't get caught up too much about the 24-inch on center. Like we said, as you put more on the outside, it matters less how much you have on the inside. So anyways, nice.
Yeah, so those are some case studies we went through. And so now you're probably wondering what paperwork is required. That's the thing that we all dread, I suppose. So CMHC has created their own attestation form that must be filled out by your energy evaluator upon completion of the performance criteria or the energy modeling assessment. Fortunately, this is a very short form. I believe it's only 1 or 2 pages, so it's really quick for your partner to fill out with the project rather. And your energy evaluator may also choose to include a short report for the package submission. This is advantageous because, as Andy was mentioning earlier, different provinces have different grid emissions. So sometimes a small report that points out what the grid emission factors were used and shows a little chart breakdown will be included for the submission package as well. Building permit energy modeling compliance forms, such as in Ontario, we have an EEDS form, or you may have also heard of the NBC 936 paperwork. While these things are not required for the CMHC MLI Select project, it's still good to work with your energy advisor on this one because you're probably going to be applying for a permit to construct the project anyhow, and you're going to need that anyway, which is something that your energy advisor can help you fill out. Yeah, and that's it
Good.
for, yeah. And I just wanted to say one more thing, which is if any of you are interested in building a CMHC MLI Select project, Building Knowledge would love to work with you and take you through an optimization very similar to the one that we just looked through, and find the package that meets the goals best for your project.
Good. Thank you, Scott. Thank you, Jeremy.
Yeah.
So Jeremy, I don't know if you're able to bring your camera back on there. We do have some questions, so we'll start here, and maybe the two of you have had a chance to look at this. We'll start with the first question that came in from Paul DeBartis. Good to have you on today, Paul. Paul is heads up the group at ResCon, who represents a number of GTA builders, large and small, in the industry. And Paul's question was, under the new Housing Acceleration Fund, the HFCA, and you mentioned that too, Jeremy, in your presentation, the municipalities are incentivized to permit as of right zoning for 4 plexes. Is there any consideration for CMHC to realign some of the selection criteria with this encouragement to 4 plexes?
That's a great question, and I think we're seeing that in a lot of municipalities across Ontario that have been successful applicants of the Housing Accelerator Fund being asked to do that. And there were, I think, 17 or 18 municipalities in Ontario alone that received half funding. Half is what we call it, Housing Accelerator Fund. So to answer your question, I mean, we're always, as I mentioned it a few times in the presentation, we're always looking to refine our programs to have the maximum impact. Currently, they're not eligible. I've seen certain projects, I don't know about MLS Select because we don't really have numbers on that, but through our direct lending products that are all also 5+ units requirement, we've seen some projects work if it's maybe 2 lots side by side, so you could do 8 units. That would qualify. If you did like a small land assembly, something like that, that would be eligible. I believe it could also be eligible if you were looking at 4 units and then an accessory dwelling unit might be eligible as well. Although I'm not clear on that, and I think that's kind of something that we're gonna see how it evolves in line with municipal policies going forward.
No, thanks, Jeremy. That's a really good question, Paul. That's a really good one, because 4 plexes are the name of the game these days. It allows the infill type properties, all that kind of a thing. So that's good, Jeremy. So well, we'll look to see what happens there. We have another question that came in from one of the attendees asking, how does the CMHC ensure the units have indeed remained affordable for 10 years? So if they do get that meet that criterion. I think you suggested that it has to be a 10, and then there's extra credit if there's 20. Is that right?
That's correct. So you can do 10. They all have to be a minimum of 10, and then they can go up to 20. But to ensure compliance, we ask that the rent rolls be submitted annually, and that's basically it. So we do allow for those guideline increases to happen, but basically when you get that first advance, or when you have your first tenants, those will kind of be locked in for 10 years plus the provincial rental increase guidelines.
Okay. We have a question from Allison, and Allison, I might have to have you help me a little bit. So your question is Energy Star level 2 for climate criteria? So I think that's the Energy Star level 2. Level 2 would, Jeremy and Scott remind me, level 2 corresponds with, is that a 25% or is it 40%? Is that 25%?
25, yeah.
25, okay. So her question is Energy Star. I'm assuming, Allison, you were referring to Energy Star for new homes. as opposed to Energy Star for large high-rise buildings. I'll just answer that real quick, if it's okay, Jeremy, because we have had that question, right? So if Allison, what you're speaking to is Energy Star for low-rise Part 9 residential. There is no specific reference to the Part 9 Energy Star for New Homes program at this time. That's something that Jeremy and I were talking to Scott, were talking about. It would be nice if there was. We have found as energy advisors and building science engineers that a lot of our builders that are doing Energy Star, that they do, to your point, actually do meet the level 2, but we have to do a proposed versus reference energy model. So we got to go do that extra step and do a hot run or a modeling run just to sort of prove that, and then you can make it. But it just doesn't take the reference off the label. There is a reference, however, in the MLI guidance document, Jeremy, if I remember right, there is reference to the Part 3 Energy Star program. Whereas the Energy Star for large buildings does in fact deem compliance with that. Is that right, Jeremy?
Yes. So the equivalency, I think it's a level 1 though. It wouldn't be considered level 2.
Level 1. Okay. Okay. So hopefully that helps, Allison. And so Darcy, good to have you, Darcy, calling from the prairies. His question is, how are the greenhouse gas emissions calculated? So quickly, I don't know, Jeremy or Scott, do one of you want to take this on?
Yeah, I can take this one on. So how the greenhouse gas emissions are calculated is from the HOT 2000 outputs for the amount of energy used per fuel source. So in these cases, it was natural gas and electricity. Those final numbers are multiplied for both HOT 2000 energy models by the grid emissions factors that are unique to both natural gas and electricity per province. And that's how the greenhouse gas emissions are calculated, by multiplying those outputs with the emissions factor. And then they're added together and compared against each other for percentage improvement.
So just to say that again, Scott, make sure we have this right. The greenhouse gas emission factors are provincially based.
Yes.
So there will be a difference across the provinces on these buildings. And again, that's why it is important to understand where that building or project lives. Jeremy, I don't know if you want to add anything to that.
No, actually, I don't have a lot of expertise in that field. I do know that we don't require any kind of consideration for embodied carbon.
That's
that
right.
would be my only 2 cents.
As of yet.
As of yet.
I know there's lots of a consideration of that for the 2030 National Building Code proposed code change form developments. So question from Allison is, how long does it take CMHC to process an application, Jeremy?
Great question. So as I alluded to, we did get slammed last spring with a lot of applicants, and it increased the timelines. Typically for a project, what happens is you work with the lender, right? And then they would send it over to our underwriting team, who would then review. So it can take probably 4 weeks, depending on the complexity of the file. Like if it's a really complex file, it can take up to 4 weeks for an underwriter to be satisfied. So 4 weeks for that period. And then there's also, obviously, it's not just in our hands, I guess is what I would say, right? So we have internal service standards, but it depends on how quick the lender is to submit, the complexity of the case. So I would say, 4 to 6 weeks is probably reasonable expectation. And it also depends on market, right? So how many files are we juggling at this time? I did mention we staffed up to accommodate a greater volume, but of course these things are always in flux. So I think that's where I'm comfortable talking about the delays. Yeah.
The one thing I will say is that we often find that the largest time frame constraint is actually when the initial design or energy model assessment is done. The earlier in the project that can be done, the better. So as builders, as designers, as architects, for those of you involved in designing these projects, do not wait until fully dimensioned drawings are done to get, energy models done. Do that up front, do it very early. There are some very significant cost savings that you can find if you do some early on discovery or an integrated design process around this. So that's where the real money, we would say, is to be saved. I do want to just bring up another screen here because we do have another question. Gilles Briand has asked 2 questions about the program. Number 1, can you confirm if the MLI Select program recognizes energy and greenhouse gas savings from Energy Star appliances on new construction? And so the answer to that is yes, it does. You'll notice in one of Scott's slides that it has references to those Energy Star appliances. So when those appliances are put into the model, the energy model platform, we can account for that. And of course, in the platform, if that appliance is being used for an assumed amount of time based on whatever the building code assumes occupant load or activities are, that if it's an electric appliance, it will apply that amount. And if it's an Energy Star appliance, and you can even go further than that, you can actually put in the actual appliance data and it'll show the reduction. So yes, that it absolutely does. Gilles asks another question. In the case study, we're comparing the greenhouse gas reductions with the national reference. Is this we're comparing that with the, sorry, this is changing on me, reductions with the national reference. Is this the Canadian average or province specific? Gilles, again, like Scott said, that reference for greenhouse gas reduction is specific to the province or the territory in which the modeling is done. So when you do the modeling, you'll choose not only your location for the weather data, but you'll also choose the location as well for the fuel sources, the electricity grid, and those types of things. I know we could, have all sorts of go down rabbit holes about, what are those references and so on and so forth. But I think one of the reasons right now that CMHC does choose to reference certain modeling programs is because it does reference provincial specific grid emissions. So that's good. I will just real quick, I do want to throw up on here because this sort of goes to an earlier question. On the screen, you're going to see that there is a document, and we can get this out to you folks. These are the CMHC ML Select, sort of the document guidance on this. And I do want to just show that when it comes to accepted softwares, it's a variety of energy modeling softwares, right? First of all, it says, it needs to be ASHRAE standard 140 tested. And then it actually goes into more detail if you want of all the different types of software can be used and so on and so forth. Names Hot 2000, Energy Pro, CanQuest, all these types of things. But then it also says, in addition to these, you have third-party building standards. That's what we were talking about, Jeremy, just a minute ago. And those third-party building standards right now do reference some existing programs. But again, they are mostly either programs that represent Part 3 construction, or unfortunately for Ontarians, they reference construction types that we don't really see here. So for instance, it would be nice someday, maybe we'll have Jeremy take that back to his team to chat about. It'd be nice to have on this list, maybe Energy Star for new homes, and maybe the CHBA Net Zero Ready program. But anyways, so we'll leave that with you, Jeremy. The other one too that we often get questions on, and I know it's come in a little bit, is about the individuals who can do this. So obviously here it lays out very clearly energy advisors on Part 9 accredited with Natural Resources Canada, and then it works into Part 3 certified energy managers and others on that part. Okay, let me just go back here. So we did have a couple other questions. Scott and Jeremy here. We had a question from Adam. Adam says, great info, appreciate the forum. What energy modeling is acceptable? So hopefully we just answered that. Again, Adam, we're glad to send you that document. The next attendee had a question, does the list of lenders to work with get shared with the applicant? Pending on the location in the country, is the list of lenders different, fewer, or greater? Jeremy?
Great question. So we do have a list that you can find on our website of approved lenders, and there's a process through which new lenders can get approved. So it does vary, different provinces, different regions within provinces will have kind of maybe a more robust community of people using this product. So yeah, you're welcome to consult the list online. You can look up our CMHC approved lenders and find one that's, that you can work with in your region. Depending on the location, is the list of lenders different? Yeah, well, I guess the list would be different based on locations, right? So, maybe you're in a rural area and you have a credit union. We have lots of credit unions listed as well that are using MLI. So potentially that would also be an option for you.
Good, good. And we have one last question, and then we're gonna wrap things up here. She just says, "What about condensing dryers?" So I'll take that one on real quick. I know in the part 3, that's the modeling types, CanQuest, DOE, Energy Plus. You absolutely would be able to use that, and of course, that's a nice reduction there on the occupant side. It also provides you the ability to limit the number of holes as well, in some ways, and the energy loads, things like that. On the part 9 side, you are able to model condensing dryers. What we'd be looking for is the manufacturer's efficiency and their EnerGuide rating. So, okay, we're going to wrap up here. Let me just go back to our slides here. So Scott and Jeremy, thank you so much for your help today. We have another session. Just everyone knows we're going to be releasing more of these sessions, but our next one that we have coming up is one of them is going to be June 20th. That's going to be a brand new window technology that's going to be coming to market. And it's going to be sort of cool. So we're bringing on a manufacturer that day with us, Geldwin, to talk about new glazing technologies. Just to give you a sense, we are seeing new residential builder type windows take a big step forward in their efficiency and in their affordability. So tie into that session for that day. Feel free to sign up for that one. The other one too, shameless plug, our Building Science Digest just went out. It's a quarterly newsletter, all sorts of different articles, notes, building science tips, and lots of cool stuff that builders are doing. So just want to say thank you to everyone. Susan, again, thank you for your support as Enbridge in these sessions.
Thanks, Andy. And thank you to everybody who is attending today. Just a quick note that in support of webinars sort of like this, we also at Enbridge have programming that we wanted to make sure everybody was understood was available with Savings by Design. And the Savings by Design actually includes the new construction affordable housing and the multi-residential projects that are in design and development. So you can have those programs right across Ontario. And basically for no cost, we provide you technical advice so that you can work towards meeting the targets of something like MLI Select. So please feel free to reach out. I think Stacey's going to put the contacts for the programs in the chat. And anyone who's interested, by all means, please give them a call.
Thank you, Susan, for that. That's actually a really nice tie-in, right? Like it's almost like there's never been a better time to build a multifamily unit.
Exactly.
You've got help on the financing side. You have folks like yourselves that help up front with the design and the initial modeling, all to drive the cost down and to facilitate the construction. That is very cool. So, Jeremy, thank you so much for joining us.
Thanks for having me. It's a pleasure to be able to speak to you all about this product, and maybe we can do another one down the road when our programs are updated. So
we'd love to
keep in touch.
Love to do that. And Scott, thank you, sir, for hopping on today and sharing that stuff with us.
Thanks for having me. I love being here.
Yeah. All right, folks, you have a very good Thursday afternoon. And like I said, we'll be sending out the notes and the recording for this, and you're welcome to share and reference that. Anyways, have a good afternoon, and thanks for attending.
Thanks all.